The crypto market is once again in a squeeze, and I'm sure most of you are wondering which cryptocurrencies are going to be the most affected by something like this. Now, luckily for you, that's exactly the question that we're going to be answering in today's video. So all that we ask is that if you like the content that we make, consider sticking around and hitting that like and subscribe button. So let's go ahead and get started with perhaps the most obvious of these squeezes first, kicking it off with the leader of crypto, Mr. Bitcoin itself. Now, there's a couple of things that we need to understand when looking at why Bitcoin is squeezing in here and where it's likely to break out to. The first one is understanding just where support is and then understanding where resistance is afterwards. Now, luckily for us, we have a really nice climbing level of support on two different fronts. The first one being this really obvious white support line that we have here. We can see that Bitcoin has come down to this price and bounced pretty consistently over the past couple of weeks here. Then the second one that kind of goes in tangent with this nice little climbing support line is this 20-day moving average. Now, the 20-day moving average is going to be a repeat theme throughout this video because we're going to see that it's pretty much being used as support across almost every crypto, whether it's Bitcoin, Ethereum, a mid-cap altcoin, it really doesn't matter. The 20-day moving average is acting as a very important support level here. So now that we understand where support is and understand that both of these different support levels are actually climbing and pushing pressure upwards, the next thing to look at is something like resistance. And on this front, we can see that Bitcoin is really struggling to break through 38,000, and we actually have not one, not two, but three different rejections off of this rough $38,000 level. So what this means is that we have a climbing level of support that is pushing Bitcoin to higher lows every time the bears push it downwards, and then the bulls are able to get up to 38,000 consistently. So what this means is that it's forming like an ascending triangle-esque pressure build or formation where pressure is actually building towards the upside with a climbing level of support and a flat level of resistance. So if you're a technical analysis person, this is going to be very similar to an ascending triangle. And if you're not, essentially what this means is imagine that you are kicking a door, for example. We have a flat door right here up top. Again, this isn't a door that's slanted. We just got a flat door. But what we have here, is every time the bears are trying to push price back down, every time that they cause a sell-off, the price ends up higher than it previously was. So the bulls are gaining momentum through making higher swing lows. They have multiple different support lines. And every time that they are testing this door, again, they are gaining momentum by having higher lows, and they're keeping the same resistance. So they keep kicking this door and making it weaker and weaker and weaker until essentially the door breaks. So they started over here, kicked it, didn't break. Got more momentum, kicked it again, came back, kicked it a third time. And that's kind of the way that these work, is that they are building pressure, in this case to the upside, and it is just hitting this door or this order wall over and over again until it's too weak and it ultimately breaks. They're exhausting the bears here. So when we're looking at this, the squeeze is essentially a squeeze via something like an ascending triangle. And then those are all the important kind of levels to keep an eye out. So right now, we're seeing support on Bitcoin side right around 36.3, roughly around that $36,000 range. And then the bulk of the resistance is right around 38,000. So overall, the chart's actually looking pretty good here. Now, does that mean that it has a 100% chance of breaking out to the upside? Absolutely not, right? I mean, there's no certainties in crypto. All we can run is probabilities and kind of see what's happening in the background. But the probabilities are saying that this thing is still remaining bullish, especially as this support kind of stays in touch. So the way that I'm kind of looking at this is I'm really not worried at all until support breaks. And again, we have two different layers around the $36,000 zone. So long as we're not seeing candle body closings beneath the 20-day moving average or even this overarching or rather uptrending support line, I'm really not sweating about the Bitcoin market at all. Now, before we move on to looking at things like the altcoin market cap, the total two, things like Ethereum as well, I want to let everyone know that we're running a quick special on our crypto retirement blueprint. It's going to be a Black Friday special. We're running it for $3, and we cover everything from Bitcoin to Ethereum to how institutional money and all these traditional finance companies are getting into crypto, how they're getting involved. We talk about the AI space. We talk about the halving cycle. Pretty much everything that you want to know about, we have inside of this crypto retirement blueprint. So if you want to get access to that, again, we're running it for a $3 special. You can check out the link in the description down below. And if it's something that you're interested in, definitely go ahead and take a look at it. Now, as I said, there are two other things that I wanted to talk about. Number one, Ethereum, and then number two, the altcoin chart. We're seeing that with the altcoin chart, it's also kind of squeezing towards the upside because we're seeing that this 20-day moving average is being used as a support. And if we zoom really far out, we can see that it's actually testing a multi-year trend line right around the $2,100 area, an area that used to be support, turned into resistance, and we've seen a couple different rejections off of this zone for Ethereum. Now that you'll notice, the total 2 chart looks very similar in the sense that it has a multi-year resistance line over here where we can see that the altcoin market has came up here once, twice, 3 times, now 4 times, and this has been a historic point of rejection. Now, I'm sure you're wondering, Brendan, how is that a good thing for a squeeze at all? And the answer is because when this breaks, I don't think it's a matter of if, I think it's a matter of when. When this breaks, there is this giant gap in the chart over here where the crypto market, specifically altcoins, can seriously see some nice upside because the next main resistance isn't up until something like $900 billion of market cap. So both Ethereum and the total 2 are also squeezing, not necessarily as hard as Bitcoin is, but we're seeing a squeeze across the board of cryptocurrency, whether it's Bitcoin, whether it's Ethereum, whether it's the entire altcoin map. There are a lot of things to really keep your eye on at this level and a lot of things to stay excited about. So overall, the crypto market is looking still very much healthy. Even when we look at Bitcoin dominance and how much that has pulled back recently, I know that that has been something that probably scared a lot of people, but it's still not anything out of the ordinary because we can go and we can take a look at Bitcoin dominance, and this 4.3% pullback that we had is really nothing, and I'm probably blocking this a little bit. There we go. This little 4.3% pullback that we've had is just a drop in the bucket in comparison to what we've seen in the past. Because in the past, we've seen pullbacks of up to 6%, and we still recovered from it. So even with Bitcoin dominance rallying off of this 50-day moving average, seeing a little bit of a pullback, it even has a clear level of support right alongside that 50-day moving average as well. So I hope everyone is enjoying the market right now. And for those of you that are going to be celebrating the holidays, I hope you have a great holiday as well. And until next time, everyone, we'll see all of you in the next video.